Good afternoon, traders. John Caruso coming back to you here for another week. Today is May 24th. We're just going to do a quick recap on the market here today. Stocks straight up out of the gate. The S&P 500 up 1.25%, the NASDAQ up 2%, and the Russell's lagging up 0.9%. We did mention last week the SPY was still carrying a neutral momentum signal. We do actually believe that that is going to shift back to positive probably over the course of the next day. Same thing with the NASDAQ, was largely carrying negative momentum. Still signaling immediate term overbought right now, but if we do get a momentum shift back to neutral, this market could still claw a little bit higher here in the near term. So the SPY looks like it's going to challenge the all-time high over the next day or two. 42.38, that's the all-time high. I think we're going to at least try to challenge that before you see any sort of corrective setback. Taking a look at oil. Oil's up 3.68% right now headed into the holiday weekend. It's a seasonality trade, typically heading into Memorial Day weekend, heading into Labor Day weekend. You see pretty big run-ups here in the price of crude. Crude oil at this point looks like it's going to challenge 67 to 68. We can start getting some closes above 68. We could be in the mid-70s before you know it, so keep that in mind. Crude oil up 3.68%. Gold flat to higher right now. Silver challenging $28 again after Friday's shakeout. Silver up 1.4%. We do think if silver can get back towards, I believe it was last Thursday's high of 28.85, I think we could see a quick shot to 30, no problem in the silver market. 10-year yield, very docile market, very quiet. The 10-year yield's trading at 1.60%. That's a risk on green light for stocks to move higher. As long as the bond market is quiet, the stock market likes it, investors like it, it's risk on in risk assets. And that's precisely what we're seeing right now. The next thing you want to key off of for the 10-year yield is going to be the June jobs report that comes out not this Friday, but the following Friday. If we do see some strength coming back into the jobs market like we expect, that's when you could start to see the bond market move again. 10-year yields back to the upside, maybe to about 170, perhaps as high as 175. But all in all, we think the bond market's largely in a trading range until we break out of that trading range. So that's kind of the near-term outlook for the markets right now. If you have any questions, feel free to reach out. I hope that was helpful for you. Once again, I'm John Caruso. We'll see you back here midweek. Take care.